Welcome in, everyone. Today we're diving deep into HSBC's 2024 annual report. It's a bit of a hefty document, but packed with insights into the bank's performance and strategy.
Definitely a lot to unpack.
One of the things that really jumped out at me was this major reorganization they've done. They've completely reshaped their business.
Yeah, they've moved from 3 global businesses to 4 new segments, effective just this year, January 1st, 2025.
And what are those 4 new segments?
Hong Kong, UK, corporate and institutional banking, and international wealth, and premier banking.
So they've really kind of carved out their strongest regional markets and then created these 2 powerful global divisions. It's a pretty interesting move. And despite this massive restructuring, they still managed to pull in a profit before tax of $32.3 billion.
That's right. Strong performance overall.
But there's so much more to dig into beyond just those headline numbers, and they're making some big plays in sustainable finance. They even launched a whole new division focused on infrastructure for a low-carbon economy.
And they're going all in on AI as well. They even set up a dedicated website to be transparent about their AI strategy.
It seems like they're really trying to cover all the bases here, from strategic shifts to sustainability and beyond. So today we're going to guide you through the key takeaways from this report. We'll break down those 4 new business segments, analyze the financials, and try to understand what it all means for HSBC's future.
We'll paint a clear picture of what's driving their current performance and what it might mean for investors or anyone interested in the global financial landscape.
Sounds good. So let's start with those 4 new business segments. We have Hong Kong, UK, corporate and institutional banking, and international wealth, and premier banking. Can you tell us a bit more about why they chose this particular structure? What was the thinking behind it?
Essentially, they've carved out their strongest regional markets, Hong Kong and the UK, and created those 2 global divisions we talked about. One focused on large corporations and financial institutions, the other on managing the wealth of individuals and families.
A 2-pronged approach. So, dominate in those established markets while aggressively pursuing growth in new areas. Makes sense. Let's unpack each segment, starting with Hong Kong. They're reporting incredible performance there. Is that mainly driven by their wealth management business?
Spot-on. Wealth management in Asia, particularly Hong Kong, is booming. HSBC's riding that wave. Their wealth balances in their wealth and personal banking division have jumped to $1.8 trillion. That's a 7% increase year on year.
Wow, that's significant. And they even mentioned attracting $47 billion in net new invested assets from Asia alone. It seems like they've really tapped into a lucrative market. What about the UK segment? What are we seeing there?
Well, you'll remember they acquired Silicon Valley Bank UK back in 2023. That's playing a big part in their UK growth strategy, especially as they expand their services to tech and innovation-focused businesses.
Right, so leveraging that acquisition to tap into new markets.
And they're also a dominant force in commercial banking, holding the top market share and boasting a 75% penetration in corporate banking.
That's quite a stronghold. And it sounds like they're not neglecting personal banking either. They mentioned growth in their mortgage lending balances, even increasing their UK market share in that area.
Exactly. They want to be the one-stop shop for all financial needs in the UK, from individuals looking for a mortgage to large corporations seeking complex solutions.
Okay, makes sense. Now let's shift gears to the corporate and institutional banking segment. This seems like a global powerhouse, right?
It is. They've combined their commercial banking operations outside of the UK and Hong Kong with their existing global banking and markets division, creating a massive global network that can offer specialized services to multinational corporations and financial institutions.
So they're the go-to bank for businesses operating across borders.
Right.
I guess they can leverage that global expertise and connections to help clients navigate those complex international transactions.
Exactly.
What about the international wealth and premier banking segment? What's their focus?
This segment is all about expanding their wealth management footprint beyond those established strongholds. They're targeting premier banking clients, growing their global private bank, which caters to ultra-high net worth individuals, and expanding their wealth manufacturing operations through asset management and insurance.
Wealth manufacturing. What exactly does that mean? Is it just a fancy way of saying they're selling more financial products?
It's a bit more nuanced. It's about creating and managing investment products and strategies that generate wealth for clients. Think of it as HSBC using their expertise to help clients grow their assets over the long term. And they're strategically targeting markets like mainland China, India, Singapore, and the UAE.
Places with strong connections to international trade and wealth flows.
Exactly.
So it's a 2-pronged strategy then. Solidifying their dominance in Hong Kong and the UK while aggressively pursuing growth opportunities in other key international markets.
That's it. And what's impressive is they're doing all this while navigating a pretty complex global economic landscape.
Let's talk about those financial highlights then, because the numbers really tell the story. We already mentioned the $32.3 billion profit before tax, but what about their overall revenue? I noticed it was relatively flat compared to 2023.
Right. Their reported revenue was $65.9 billion,
Mm-hmm.
which is basically the same as last year. However, if you exclude the impact of what they call notable items and adjust for currency fluctuations, their revenue actually grew by 5%.
Hold on. What are notable items?
These are one-off events that can kind of distort the true picture of a company's underlying performance. In HSBC's case, this includes things like the sale of their French retail banking operations and their exits from businesses in Canada and Argentina last year.
Ah, okay. So those are big events that impact the reported numbers, but they don't necessarily reflect the ongoing health of their core businesses.
Exactly.
So their underlying revenue growth is actually quite healthy.
Yeah.
What were the main drivers behind that performance? They mentioned higher interest rates in the report, but surely there's more to it than that.
Interest rates definitely played a part, boosting their banking net interest income to $43.7 billion. But they also implemented strategic cost management measures and expanded their presence in those high-growth areas like wealth management, particularly in Asia.
So it's a combination of favorable external factors and some smart internal strategies.
Precisely. They're making the most of the opportunities presented by the market while keeping a tight rein on costs.
To get a more complete picture of their financial health, we need to delve a bit deeper into their financial statements.
Absolutely.
Let's start with the income statement. What key trends jump out at you? It seems like there are a lot of moving parts with all the restructuring going on.
Yes, but if we break it down, the income statement reveals a clear story. Even excluding those notable items, their revenue shows consistent growth, especially in areas like wealth management and insurance. At the same time, they've managed to keep operating expenses in check, demonstrating their commitment to efficiency.
That's impressive, especially with all the inflationary pressures businesses are facing globally. It shows a real focus on discipline. What about their balance sheet? What does that tell us about HSBC's financial stability?
Their balance sheet provides a snapshot of their assets and liabilities, which is crucial for assessing their overall financial health. One key takeaway is their strong capital position. Their Common Equity Tier 1 CET1 ratio, which is a measure of a bank's ability to withstand financial shocks, remained well above regulatory requirements.
So they have a solid foundation, which is reassuring in these uncertain times. What about cash flow? I always find that statement a bit more challenging to interpret.
The cash flow statement helps us understand how HSBC is generating and using its cash, which is vital for their ability to invest, pay dividends, and manage debt. In 2024, they continued to generate robust cash flow from their core operations.
That's a positive sign. And speaking of cash flow, I noticed the report emphasizes something called free cash flow. Could you explain what that is and why it's so important?
Free cash flow is the cash a company has left over after covering its essential operating expenses and capital expenditures. Think of it as the money they have available to reward shareholders through dividends and share buybacks, or to reinvest in growth opportunities.
So strong free cash flow indicates a healthy business that can generate value for its investors.
Precisely. It gives them flexibility and options, which is particularly important in today's dynamic and often unpredictable economic environment.
Speaking of rewarding investors, HSBC is being quite generous with their dividends and share buybacks.
They are.
I noticed they declared a total dividend of $0.87 per share for 2024, including a special dividend of $0.21. And they just recently approved another interim dividend of $0.36 per share payable in April of next year. That's a pretty substantial payout. What does this tell us about their outlook?
They're definitely returning a significant portion of their profits to shareholders, signaling confidence in their future earnings potential.
And we can't forget the share buyback program they executed last year. That also contributes to shareholder value.
Right. Absolutely. Share buybacks reduce the number of outstanding shares, which can boost earnings per share and potentially increase the value of the remaining shares. It's another way HSBC is actively working to enhance returns for their investors.
Okay, so they're taking concrete steps to reward shareholders, which is great news for anyone invested in HSBC. But I'm curious, with all this positive performance, what are the challenges they're facing moving forward? The report seems to be pretty upfront about the fact that they're not immune to global headwinds.
That's right. They're not sugarcoating the realities of the global economy. Inflation, interest rate volatility, geopolitical tensions, these are all factors that could potentially impact their performance going forward.
And they're also dealing with this monumental transition to a net zero economy. They've set some pretty ambitious sustainable finance targets, but achieving them will be a huge undertaking.
They're aiming to provide and facilitate between $750 billion and $1 trillion of sustainable finance and investment by 2030. That's a massive commitment, and it will require navigating a rapidly evolving landscape of regulations, technologies, and customer demands.
It sounds like quite a balancing act. So while they're clearly in a strong position right now, they're not resting on their laurels. They're acutely aware of the challenges ahead.
Exactly. They're adapting their strategies and actively investing in areas they believe will drive future growth. But to understand that even further, we need to delve deeper into their specific initiatives and what they mean for the long-term outlook of the business.
Let's do that. We'll pick up on that exploration in part 2 of our deep dive, where we'll unpack their technology strategy, their approach to sustainable finance, and their unique global perspective. Stay tuned. Welcome back to our deep dive into HSBC's 2024 annual report. We left off talking about the challenges ahead for HSBC despite a strong performance.
Yeah.
One thing that really stuck with me was their focus on technology, specifically AI. They've even got a whole website dedicated to transparency around their AI strategy.
Yeah, it's pretty interesting.
Seems like they're going beyond just, adopting new tech. They're actually developing their own AI-powered solutions.
Absolutely, they are. One example that caught my eye was their work on advanced data analytics.
Oh yeah, I saw that too.
They're using it to get deeper insights into customer behavior, manage risk more effectively, and even personalize financial products.
So they're not just collecting data, they're actually using it to improve their services and make better decisions.
Exactly. And it's not just about improving existing services either. They're exploring how AI can transform the way financial services are delivered in the future.
Like what? What are they thinking?
Well, imagine a world where your financial advisor is a sophisticated AI that analyzes tons of data and provides personalized recommendations tailored to your specific goals and risk tolerance.
That sounds exciting and a little bit scary all at the same time.
Right.
What about the potential downsides, though, of relying so heavily on technology?
That's a good point. The report does acknowledge the complexities of integrating new technologies into their existing systems. Legacy systems can be a real roadblock to innovation. It takes careful planning to modernize them without disrupting core operations.
And then there's the whole issue of talent. You need the right people to develop and manage these new technologies.
Right, exactly. The report mentions the challenge of attracting and retaining skilled professionals in areas like data science, AI development, and cybersecurity.
It's a competitive market for sure.
It is. They need to offer compelling career paths to attract the best and brightest.
It seems like HSBC's technology journey is this mix of ambition and pragmatism. They've got a clear vision, but they're also aware of the challenges.
Yeah, I think that's a fair assessment. They're making significant investments, but they're also being realistic about the potential hurdles.
Okay. Let's shift gears now and talk about another area where HSBC is making waves: sustainable finance. Remember their ambitious goal: to provide and facilitate between $750 billion and $1 trillion of sustainable finance and investment by 2030.
Oh, yeah.
Huge commitment.
I'm really curious to know how they plan to achieve that. It's a bold goal, but they're backing it up with concrete actions. They've established a dedicated division for sustainable finance. They're developing new products and services, and they're actively engaging with clients to help them transition to a low-carbon economy.
So they're not just talking the talk, they're walking the walk.
That's right. They see sustainable finance as both a moral imperative and a business opportunity.
Can you give us some specific examples of what they're doing?
Sure. One area they're focusing on is financing renewable energy projects, providing loans, issuing green bonds, and investing in companies that are developing clean energy solutions.
So they're helping to accelerate that shift away from fossil fuels.
Exactly. And it's not just about renewable energy either. They're also financing sustainable infrastructure projects like energy-efficient buildings, green transportation systems, and water conservation initiatives.
So they're essentially helping to build the foundations of a low-carbon economy.
That's it. And they're not just focusing on large corporations either. They're also providing financing options for small and medium-sized enterprises that are adopting sustainable practices.
That's important because those businesses often face more challenges when it comes to accessing capital for those kinds of green initiatives.
Yeah, absolutely. And they're developing innovative financial products too, like green mortgages and sustainability-linked loans.
Which incentivize borrowers to adopt more environmentally friendly practices.
Exactly.
It sounds like they're really trying to make sustainable finance more mainstream and accessible.
They are, but they also acknowledge the challenges. Measuring and managing climate-related risks is still a relatively new field. There's a lot of work to be done in terms of developing standardized metrics and ensuring transparency.
And they can't do it alone. They need supportive government policies and regulations to really create a level playing field.
That's right. So while they're making impressive progress, they're also realistic about the complexities involved.
Their commitment to sustainable finance is definitely commendable. But it's interesting to consider whether it's purely altruistic or if there are, financial incentives at play.
I think it's probably a combination of both. There's a growing demand for sustainable investments from customers and investors, and HSBC is well positioned to capitalize on that trend.
It's interesting how sustainability is becoming more and more intertwined with business strategy. It's not just a niche concern anymore. It's a core part of how many companies operate.
I agree. And HSBC is definitely at the forefront of that shift. They're showing that it's possible to be both profitable and sustainable.
Now let's talk about another key aspect of HSBC, their global perspective. They operate in over 60 countries and territories, serving a diverse range of customers. How does that global reach influence their strategy?
Their global presence gives them a unique advantage. They have insights into economic trends, regulatory landscapes, and cultural nuances that a lot of their competitors just don't have.
And they're not just operating in different markets.
Yeah.
They're actually actively shaping global financial policies.
That's true. They're working with international organizations to promote sustainable development and financial inclusion.
It sounds like they're playing a significant role in shaping the future of the global financial system.
They are. And their global perspective is also helping them identify and capitalize on emerging market opportunities, particularly in Asia.
Asia being such a key engine of global economic growth, HSBC is really well positioned to benefit from that growth.
Oh, yeah. Their deep understanding of Asian markets is a valuable asset.
So their global reach isn't just about scale. It's about depth of understanding and the ability to connect the dots across markets and cultures.
Exactly. It's a key differentiator for HSBC.
We've covered a lot of ground in this part of our deep dive. We've explored HSBC's technology strategy, their commitment to sustainable finance, and their global perspective. What stands out to you as the most important takeaway from this exploration?
For me, it's HSBC's ability to navigate complexity. They're operating in a world that's increasingly interconnected, rapidly changing, and full of uncertainty, yet they're not just surviving, they're thriving.
I agree. They're making strategic bets, taking calculated risks, and demonstrating a remarkable capacity for adaptation.
They're a fascinating case study in how a large established institution can embrace innovation, drive positive change, and position itself for continued success in a really complex and ever-evolving world.
Well said. Now, before we move on to the final part of our deep dive, I have a question for you. Given everything we've discussed so far, do you think HSBC has the potential to become a model for other financial institutions around the world?
That's a great question, and one that we'll explore further in the next part of our deep dive, where we'll assess HSBC's overall performance, consider their challenges and opportunities, and discuss their potential impact on the global financial landscape.
Sounds good. We'll see you there for the final part of our deep dive. Welcome back to the final part of our deep dive into HSBC's 2024 annual report. We've explored their new business segments, their impressive financials, dug into their tech strategy, their commitment to sustainable finance, and touched upon their unique global perspective.
A lot to unpack.
The big question that remains for me is, does HSBC have the potential to become a model for other financial institutions?
Yeah, that's the question, isn't it?
Let's unpack that a bit. What are the key indicators that suggest HSBC might be a role model for the industry?
One thing that jumps out is their commitment to long-term value creation. They're not just chasing those short-term profits.
Right.
They're making decisions that'll benefit both the company and its stakeholders for years to come.
Yeah, their investments in technology and sustainable finance seem to really support that. Those initiatives might not pay off right away, but they're definitely setting them up for a more sustainable and profitable future.
Exactly. And they're doing all of this while navigating, a complex and volatile global economy. They're facing those headwinds like inflation, geopolitical instability, and regulatory changes. But they're adapting and finding ways to thrive.
That resilience is something else. It's something other institutions could learn from.
Yeah.
You're not just weathering the storm, but finding opportunities within it.
Absolutely. Another thing that sets HSBC apart is their willingness to embrace change and challenge the status quo. Their decision to restructure their entire business was a bold move. It shows a commitment to staying ahead of the curve.
That agility is so crucial in today's world, especially for those large established institutions. It's easy to get stuck in the old ways of doing things.
It is. They're also fostering a culture of innovation, encouraging experimentation, and investing in employee development, which is essential for attracting and retaining top talent.
It's crucial for any institution that wants to compete in the digital age.
It is.
So there's a lot to admire about HSBC's approach, but no institution is perfect.
Yeah.
What are some of the challenges they face that could hinder their ability to serve as a model for others?
One challenge is just the sheer complexity of their operations. They have a vast global network, a diverse range of businesses, and a really complex regulatory landscape to navigate.
Managing all of that effectively is no small feat.
It's not. It requires strong leadership, robust systems, and a culture of accountability.
And they face intense competition too. Right. Both from traditional financial institutions and new entrants.
Oh, definitely. Especially in the technology space.
The financial landscape is changing so rapidly, they need to constantly innovate and differentiate themselves to stay ahead.
And let's not forget about the risks. The ever-present risks of cyber attacks, data breaches, and financial crime. Those risks are only going to increase as the industry relies more and more on technology.
It's a high-stakes game for sure. And HSBC needs to be on top of their game to manage those risks effectively.
They do.
So while they have many strengths, they also face those significant challenges. It's a balancing act.
It is.
What matters most is how they respond to those challenges.
Absolutely.
And based on their annual report, it seems like they're taking a proactive and strategic approach.
They are. They're identifying key industry trends, investing in capabilities they need, and adapting their strategies to stay ahead.
And they're doing all of this while staying true to their core values of sustainability, integrity, and customer focus.
Those values are evident in their commitment to sustainable finance, their focus on financial inclusion, and their efforts to build a diverse and inclusive workforce.
Those values resonate with customers, investors, and employees alike. They contribute to HSBC's strong reputation and brand equity.
Right.
So can HSBC truly be a model for other financial institutions?
Based on what we've seen, I'd say they're on the right track. They're demonstrating strong performance, making smart investments, and embracing values that'll shape the future of finance.
They're not just adapting to change, they're driving it. And that's something worth watching closely.
Absolutely.
As we wrap up this deep dive, I want to leave you with one final thought. HSBC's story reminds us that success in the financial industry isn't just about numbers.
It's not.
It's about values. It's about making decisions that benefit not just the company, but also the communities they serve, the environment they operate in, and the people they employ.
It's about building a sustainable business that creates value for everyone.
Exactly. And that's a lesson that all financial institutions, regardless of size or location, can learn from.
Well said.
That's a great note to end on. We've covered a lot of ground in this deep dive. We've explored HSBC's performance, their strategies, and their potential impact on the future of finance. It's a complex and fascinating story, and I hope you've come away with a deeper understanding of this global giant.
As always, we encourage you to keep exploring, asking questions, and challenging assumptions. The world of finance is constantly evolving, and it's up to all of us to stay informed and engaged.
Until next time, keep diving deep.